Hey everybody, welcome to Finance Friday. Thanks so much for joining me again. Last week we spent a little bit of time talking about what we can expect in a rising rate environment. And I want to just break out a part of that conversation and spend a little bit more time talking about that this week. And that is the effect of rising rates on our investment portfolio. So statements are coming out soon. And for those of us who are maybe more conservative investors who have a greater percentage of fixed income holdings in our portfolios, we may notice that the value of our portfolios have declined, despite the fact that we continue to hear news about how stock markets have marched along to higher levels. And we might wonder why that is. And so the reason is that as rates rise, the value of the bonds that we hold in our current portfolio declines. And so I'll give you an example of why that is. So imagine that you hold a bond and it's worth $100 and it pays 3%. Now imagine, because the rates have gone up and the rate environment is rising, there's a new bond that's issued at 3.25 and are also asking $100 for that. Your bond at 3% no longer going to be able to fetch $100 on the open market. You'll maybe have to take a little bit less than 100 because you're competing with that new bond that's been issued at a slightly higher rate. So as a result, when rates are rising, the bonds that we currently hold in our portfolio will decline in value. Now, as long as we hold those bonds to maturity, they'll still give us back that full face value of $100. But in the interim, what we'll see is a temporary decline in the value of those bonds because rates have risen. So just wanted to break that concept out a little bit. So when statements arrive and we start wondering, well, why has my portfolio value changed? Despite the fact that rates have gone up and stock markets are continuing to climb, we have a little bit of an understanding of how rising rates affect the fixed income component of our portfolio. So thanks so much for joining me. If you've got any questions or comments, please feel free to reach out, and we'll talk to you again next week.